believe, correct me if I'm wrong, the loonie was actually one of the worst performers last month. So what has changed with it?
Well, it was also a month in which risk sentiment began to back off towards the end of the month. We had a very positive business outlook survey. Once you got past the question that said how bad have things been, which was terrible, when they asked how do things look over the next 12 months, the answers were all pretty optimistic. And I think the market took some confidence from that, plus the earnings reports, plus the rebuying of risk that we're seeing.
Now, does any of that, though, also take into account the outlook for commodity prices? I mean, how linked is the loonie with the direction in commodities?
Well, it's obviously very linked, but it's more complex than that. I mean, the commodity prices are linked with the business cycle. They're also linked with concerns about U.S. monetary and fiscal policy and looking for a safe haven, that's non-dollar. And they're linked with global risk appetite. And as long as all three of those are pushing in the same direction, currencies such as Canada and Aussie are going to do extremely well.
Okay, so give us the sense, Steve, of where you see the Canadian dollar going. I mean, is it going to reach possibly parity with the U.S. dollar?
I don't think so. Not while the Bank of Canada has anything to say. I mean, the prospects for the Canadian economy are improving, and as I said about the survey. But if you look at some of the incoming contemporaneous numbers, they're still pretty weak. I mean, we had a very weak shipments numbers. Orders still look very soft. I don't think the Bank of Canada really feels that, given the current state of the economy, that the Canadian dollar should appreciate anywhere close to parity. Especially because once you get close to 105, it really damages the Canadian retail sector because it's so easy for so many Canadians to shop in the U.S.
Well, that actually leads to my next question, which is, as the Canadian dollar strengthens, I mean, what kind of impact can we expect from here in the United States?
Well, I mean, as it strengthens, obviously, Canada is a very major trading partner, so there's some competitive advantage with the U.S. But I think that the impact will be felt more on Canada because the U.S. still retains a dominant role in trade with Canada versus the other way around. But I think the impact is exponentially greater because it's not just the normal tradable goods sectors that get hurt; it's the retail distribution sectors that are also hurt.
And just sum up for us, Steve, some of the other currencies you're bullish on right now.
Overall, certainly over an extended period, we like commodity currencies. We see Aussie going to 90 on a 12-month horizon. We see Kiwi rebounding. As I said, it's a very positive environment. The world is rebounding and probably faster than still priced into most forecasts. But I think there's also the underlying concern that you want alternatives to the U.S. dollar because of the uncertainty over the policy framework that the U.S. has, and Aussie and Kiwi protect you against those shocks.
Okay. Steve, thank you very much for talking to us about the currency market. Stephen Englander, Chief U.S. Currency Strategist at Barclays Capital. And we're also getting some headlines right now. Bloomberg News reporting earnings coming out from Schwab second quarter, matching estimates at 18 cents per share.